Mortgage Weekly. I think this is about video 7 probably. So again, if this is your 7th time with us, thank you for your support. Me and Joe have had a lot of fun doing this video. So of course, we're joined today with Joe Bladdock. He is a mortgage professional in and around the Barrie area. Tons of experience and really a pleasure to work with. Definitely a super knowledgeable guy. So again, we're happy to have you today, Joe.
Thanks very much, Sam, and thanks for that awesome, very kind introduction. You make me feel a little bit blushed there, but that's nice. It's always good working with you as well, Sam. You've been working with our first-time home buyers as well as folks that are refinancing, and you're always working with clients as well. It's great to have you part of this as well. I know that you moved here from Ottawa and you've been in the mortgage industry now for about a year, and that's really exciting. And you're married, and how are things going for you today?
It's going good. We
Yeah,
survived the snowfall here
we did.
here in
Yeah,
Barrie. Yeah, weren't fully expecting that. But yeah, it's been good. We're kind of seeing the change into spring. We went for a walk the other day.
oh,
We
that's
like to
great.
try and get out and do trails. So if anyone's watching and you enjoy trails or you're looking for something to do outside, I would 100% recommend the All Trails app. We've been using it quite a lot, and it's nice seeing all the buds on trees now. It's kind of giving us hope that, maybe we'll be into spring soon.
Yeah, exactly. And you know what? You showed me that app a few months ago, and I've been using it a lot on our family walks. It's great. You load it up on your phone, and you're all set to go. And you can see actually where you are, and even tells you elevations. So
Hmm.
that's really neat.
Yeah, it's very handy if you're somebody like myself who tends to get lost on walks, and it is very difficult once you're in the middle of a trail and you realize you have no idea how to get back to the head of the trail to get home. So it's a really good app. Yeah,
Yeah,
so we've
yeah.
been trying to keep active. Again, we're both pretty excited that the lockdown is starting to lift a little bit. Some things are maybe starting to open up that weren't fully open before.
I know, like with the red zone right now, it almost seems like when I hear we're entering the red zone, it seems like a really
Mhm.
bad thing, but it's actually a really good thing in a lot of ways that things are opening back up and we're kind of able to do more things in the economy now.
That's right. Yeah. Yeah.
Yeah. So
Yeah.
that's good. Yeah.
Hmm. Yeah, and today we're going to be talking a bit just to give everyone a rundown of the schedule. So we're going to be chatting a bit about how much you can afford. So Joe has some really great information that we're going to go through in a little bit, chatting about where rates were a few years ago compared to where they are now, and really what that means in your personal dollars. So stay tuned for that. And at any point in the show, if you've watched our previous weeks before, we also do a draw at the end of the video for a winner to win a $25 Skip the Dishes e-gift card. And to be entered
Yes.
into that, it's just simply a question in the form of a comment on
Yes.
any of our videos or sharing it. It's gone pretty well so far, eh, Joe?
Yeah, it really has. It's really gotten a lot of engagement, a lot of questions asked, and I really love seeing people come online and just say hello. I've already seen that we have a few people say hello already, so those will count as entries, of course. And if you have a question, by all means, ask Sam and I our mortgage questions, and we can answer them during the show live. And if we get your question throughout the week, that will count as an entry as well for the next show, as long as it's within the next 6 days. And we'll get to your question on the next show. So, yeah, I really enjoyed that part, just seeing everyone come online and just say hello and just ask us a question. I find it's really nice to engage with everybody.
Absolutely. And it's always
Yeah.
fun having the conversation with the winner of the draw when sometimes they don't even know that they've won. And
Yeah.
I mean, what better news could you get than you get a free $25 gift card to Skip
Yeah.
the Dishes?
Yeah, exactly. I love ordering and to have the privilege to do that. Hey Nathaniel, yeah, thanks for the shout out there. I love being able to order in when I can and just have that food delivered nice and hot. It's ready to
Hmm.
go. Maybe on a Friday night, you can plan a date or something and just say, "Hey, I entered this competition online and I scored us a Skip the Dishes gift card. I'll make us dinner tonight."
That's right. And save you some of that cleanup on dishes later on.
Exactly, exactly. But yeah, it's also like I miss also eating out, but you know what? I've never I've never took advantage of eating in the way I did in the past. So it's COVID has allowed me to enjoy that a little bit more frequently than I usually would
Hmm. Yeah,
and
yeah, I
experience
think
it more differently, right? So
for sure, for
yeah,
sure.
yeah. But yeah, I'm looking forward to getting into today's topic.
Hmm.
That would be, how much more home you can afford in our little mini series that we're starting off here. I'm really excited to put together some numbers for us today, and I'm hoping to share them with us all. And as I share those numbers, uh, if anyone has a question, please reach out to us live stream here. I have the chat open, and then I can answer those questions, and Sam and I can help you with your mortgage as well. So Sam, with the housing prices, we've seen them go up quite considerably the last 2 years, haven't we?
Absolutely. And
Sure.
definitely if you've been on any of our previous videos when we've been chatting with real estate professionals in London as well, our last week was down in the Windsor area, you're seeing that it's not just a limited case, right? We're seeing that all across Ontario, outside of the GTA, house prices are rising. And with interest rates so low, it's really created a very busy and booming market.
It really has. And because of the busy and booming market, it's allowed people now to sell and move up to their next home. And, what is particularly interesting is that as they are moving up to their next home, they're noticing that their payments are not going up.
That's
And,
right.
they're flabbergasted. I'm moving up to a bigger home. Why aren't my payments going up? So part of what I wanted to share with all of us today and is a slide I made, and it kind of illustrates what's happening and how much more home everyone is now affording because of the change in interest rates and how they've had a dramatic impact on how everybody can afford a mortgage right now.
Mhm. Yeah, that's awesome.
Yeah, yeah,
Should we jump into it?
yeah, yeah. Let's get started. Why shall we? So let me bring up my slide here, and I'll just share it with all of you. Okay. And what I'll do here is I'll just go in here. Can you let me know? Can you see this okay?
Yep, looks good, Joe.
Okay, thanks, Sam. So what I wanted to illustrate here is just that let's take a look at the market 2 years ago. This was a couple years after CMHC had predicted house prices were going to crash, which they didn't. They actually kept going up. And interest rates had started to rise. And the growing sentiment in my office was that people were calling in with variable rates to lock in, and people were calling in with fixed rates to refinance and lock in for the next 5 years.
Mhm.
Even though their rate might have been lower, they wanted to lock in. And that was because rates were starting to climb. We were used to 2.6, 2.7, and then they started climbing. We started seeing 3.4, 3.5, and they topped out around 3.64. And this is a typical scenario here I just put together. So if someone would be buying a home in February 2019 for 550,000, they would put 20% down and have a mortgage amount of 440. And at 3.64%, that monthly payment, let's see here, I can just move to the next slide, would end up being $2,003.58. I
Wow.
mean, that's still pretty good for a house like that.
Mhm.
Compared to the rents, you would want to get into a property because you're going to be paying down a mortgage instead of paying down your landlord. What do you think, Sam?
Absolutely.
Yeah.
Yeah. Yeah, and I think on the last few videos we've done, we've been talking about almost treating a home purchase as an additional household income, right? Like that you want your house to work hard for you, to be appreciating in value. So when you think about the cost of renting versus paying 2,000 for a monthly mortgage payment, and then having that home also earning you extra money in the end, it's definitely a great option.
Yeah, exactly. And as the house is making you money, the rates have gone down dramatically
Mhm.
this year because of COVID. Well, since last year and into this year. And we're starting out this spring market with a very low interest rate compared to 2 years ago, February. So February, they were topping out around 364. And I remember doing one mortgage at this rate. And this person was very happy that they were able to lock in because they thought rates were going to keep going higher.
Right.
So
Wow.
164 is the current rate, and that is the current payment for this exact mortgage.
Wow.
Imagine going into the market now and seeing that payment.
Wow. That's a
So
pretty stark difference.
pretty stark difference. And it always surprises me when I look at this way because it's the exact same size mortgage and you're paying it off in the exact same amount of time. And yet it's such a big difference.
Mhm.
And this is part of what's happening. People are moving up and they're getting their new mortgage, but they're noticing their payments are not going up.
Right.
So let's compare.
Mhm.
We'll talk a little bit about the the size of home you can buy on our next week's episode, but right now let's compare and go into the nitty gritty and just dive into the numbers about what a mortgage now versus 2 years ago would look like on the total interest you're paying for the 5 years,
Okay.
the amount of principal you're paying down over the 5 years, the difference, and then
Mhm.
also the difference in the payment. Because I think those three items is what everybody should always be concerned about when they're comparing their mortgage.
Absolutely.
Yeah. And especially like if you're looking to refinance and you have a hefty penalty, this can help offset the penalty by making sure that you can review it in all the different ways that you need to. So the first thing
Right.
would be the difference in the total payments. So obviously there's a difference between $2,003.58 and $1,547.07. It's like a car payment right there.
Hmm.
So over the 5 years, which is 60 months, that works out to, you want to take a guess?
Is it 400 and change?
Works out to
$27.
$27,420.
Wow.
So quite a bit of money. And over the 5 years, it does make an impact because it's 400 and change every month.
Right.
Yeah.
Wow.
And then at the end of the 5 years, you're left wondering, well, I've paid less now every month. That
Hmm.
must mean that my ending balance is higher because I've paid less.
Right.
But in all actual fact, because you're paying a lower mortgage rate, your ending balance is $14,639.98 lower than it would have been if you stayed in the higher rate.
Wow.
Yeah.
That must shock a lot of people thinking that you're
Yeah.
spending lower each month and you're actually ending with a lower balance at the end of the term.
Absolutely. It really shocks people. And most folks are concerned about the 27,000 number alone.
Hmm.
Taking into account the 14,000 number is the big one
Right.
because it really adds. And when you're looking at a penalty of 10,000 or 20,000 on a mortgage, that can seem considerable. But when comparing it for the next 5 years, you can really make the savings up.
Right.
All right, so now the last number, and this would be the total and interest paid. So with every payment, it's allocated a little bit to principal and a little bit to interest.
Hmm.
And over the 5 years, certain amount goes to interest and certain amount goes to principal. And the higher your mortgage rate, the more goes to interest. But because 164 is so much lower than 364, there is a huge difference. And even though you're paying more principal and you're paying a lower monthly payment, you're still going to also save on the interest.
Mm-hmm.
And here's the total amount. I'm just going to put it here. And I'm just going to pause. And then I'm going to say it. Ready? There it is. $42,034 in difference in interest paid. So that is a big
Wow.
difference. A big difference. So let's
Wow.
just see if we have any questions right now here. Okay, we don't have any questions right now. I can see the suspense is there.
Wow.
So looking at the difference here, Sam, it's pretty big. So refinancing your mortgage and taking a lower rate can make a big difference over the long term. But really, in the short term, you're only going to see a difference of $456.51.
Right. Wow.
So it's hard to see the difference immediately. It's something that is realized over the long term. And that's why I put together this slide, because all of a sudden folks are realizing I can move to a higher priced home and not pay any extra money compared to what I'm paying now.
That's
Or
right.
yeah, exactly.
Mm-hmm. And it's great to see again the ripple effect of, you know, what a lower rate actually does. I mean, most people, again, as you were saying, are just looking at the $27,000 number, that how much do I save total each year, thinking that that's really the only benefit. But it's a really great slide, because it takes it a couple levels deeper of the savings are actually, you know, exponentially more than just what you're saving in payments each month, but it takes effect over the 5 years.
Yeah, exactly.
Mhm.
So let me stop that there. And I just wanted to share that today with all of you. If any of you have any questions about your own mortgage or want to chat about any specific details in terms of your financial situation, I'd be happy to go over that with you. Please click the link below, and I'd be happy to set up a call with you to go over your specific scenario to uh, analyze where you're at and how much personally you could save by either refinancing your mortgage just to get the lower rate, or even looking at refinancing and including any debts. Because another thing people are realizing is they can increase their mortgage by over $100,000 and still be paying the same amount of money.
That's right. Yeah, it's definitely the season for it, because we're
Yeah.
seeing a lot of people with, you know, more accrued debts because of COVID, as well as
Mhm.
the lower rates. It's really a great time. And like you're saying, we would love to chat with you. Again, Joe is extremely knowledgeable in the entire mortgage process. So definitely our office would be able to help if there was any question of refinance or wondering where you're at. We definitely would love to have that chat with you.
Okay, awesome. I think we have a draw coming up now, right?
We do. I was just about to ask if you had your snare drum ready for us today.
I do. Yeah, I got it ready to go with my Dave Grohl sticks.
Oh,
Ready to
nice.
go here.
Alrighty.
All right. So just to let you guys all know, Sam said it already a bunch of times. If you want to enter our draw, just leave a comment or a question or share the post here so we can help everyone else answer their mortgage questions, and
Right.
you know, uh, help them also get a $25 gift card. So you have the names there, right, Sam?
I do. I have them in the wooden bowl ready to go.
Okay, here we go. I'll do the snare roll, and if you guys don't hear the snare roll, it's the Zoom audio that's interfering here.
Right.
All right, here we go.
And the winner is Mike Froggy.
All right.
Congratulations.
Congratulations, Mike. Yeah, awesome. Well, I hope you enjoy your gift card, Mike, and thanks for entering last week on our draw.
Mhm. Absolutely. And if you want Mike's name to be your name on next week's video. Don't forget to share this post. And as Joe was saying, if you had any questions or ideas for future videos, please drop those in the comments. We'd love to be able to bring you the content that you're looking for. But as far as it stands, I think that is all for today's video. So don't forget to comment or share. Thank you, Joe, for joining us this morning.
Thank you very much, Sam. It's been great being here. Thanks for just like being here and doing these videos together.
Mm-hmm.
Okay, awesome. Well, I hope you have a great day, everybody. We'll talk to you.